Welcome to a Seeds of Wellbeing Experts in the Field podcast, featuring people working in their fields of expertise to provide support for agriculture producers in Hawaii, in the United States, and in some cases around the world. These podcasts are made possible by a grant from the University of Hawaii College of Tropical Agriculture and Human Resources, also known as CTAHR, and the Seeds of Wellbeing or SOW project, and is supported by a grant from the U.S. Department of Agriculture, National Institute of Food and Agriculture, and the Hawaii Department of Agriculture.
And when, what I tell farmers is if they're trying to raise money or they're feeling stuck or they don't know where to go or they don't know what their next steps might be to raise money, just give me a call and we'll talk it through.
In this episode, we speak with Eric Bowman from the Kohala Center in Waimea on the Big Island of Hawaii. Eric works with ag producers on all the islands to help secure funding needed to start and maintain their farmer ranch. In this discussion, we focus on options for microloans through crowdfunding and grants that are available from the Natural Resource Conservation Service, or NRCS. The views, information, or opinions expressed in this episode are solely those of individuals involved and do not necessarily represent those of the University of Hawaii College of Tropical Agriculture and Human Resources, our funders, or any of the organizations affiliated with this project. Now let's hear more from Eric.
I think one of the success metrics in my job is helping people access resources. I'm at the Kohala Center currently, and where I've been for just over the past 4 years, and they brought me on to manage their 2 microloan programs, one of which is in-house and one of which is on Kiva, and really to focus on debt financing. I'm part of a broader team that works to bring resources into ag, including educational and then grant, primarily through the Farm Bill program. Speaking about like debt financing in general, I think there's like a ladder, and some people have longer legs and they don't need the lower rungs and they can just step right up. But a lot of farmers are stepping into agriculture is very resource intensive, capital intensive, right? Like takes land, you're investing resources to build super long-term infrastructure like barns, equipment, fencing, and then you're going to put in crops, whether they're, just take coffee, you're not going to get any revenue for 3 to 5 years. If you're doing field crops, even then you're looking at 6-9 months until you're starting to really pull, so it takes a lot of money, right? Frequently that money's inherited, just let's be frank about agriculture in general. That's, maybe it, and I think what's unique about Hawaii is that our agricultural sector is, I consider it post-apocalyptic twice. There was colonization and the destruction of an indigenous cropping system to replace that with almost a feudal plantation system. And then that collapsed recently, a few decades ago. My personal background is I moved here from Washington State, where, you would see these large family-owned farms, but it was still like, great-grandfather got the property and, homesteaded it. And then grandfather, he put in the orchard and the barns. And then, dad, while I was off to college, he really got us into, good genetics and artificial insemination. And then we joined this larger system. And then, now, the son or whatever is arriving, they've been at this for a century, right? With all this momentum and infrastructure. And a lot of people coming into ag, they in Hawaii, it was plantation land, it went fallow, and then they're coming in either older without a long runway or a succession plan, or younger without a lot of assets under them. So I think there's so they come in with their equity, right? Whatever that might be, and then you got to bring the money or you got to borrow the money. So the Kohala Center has us focused on the sort of more of those vulnerable or disadvantaged producers who maybe 5,000, 10,000, 20,000 and below would really make a big difference. Maybe they're just getting their place up and running. They need fencing, driveway gravel, land clearing, an initial barn, and then after that, kind of what I would call like microfinance, I would say there's like community development finance, like I know one of your future guests is going to be Steward. That would be an example of like more like community development finance, Feed the Hunger Fund, and then so that's maybe more like 50,000, maybe 20,000 to 60,000, that kind of range. And then a little farther up the ladder, you probably have the USDA. They're one of the larger lenders to ag in the state. USDA farm loans here in Hawaii County. That's Jennifer Balderas and her team. And then, then getting into more traditional, better commercial finances, farm credit, which is the farm credit system here. The division is called American Ag Credit. So that's Linus Tavares out of Hilo. They're the number one lender to ag in the state.
And is that above the 60K mark, or is that in the 20K and up mark?
I would say American Ag Credit can do almost anything. They can do small loans. They could do a $5,000 loan to an immigrant papaya grower, all the way up to financing a $10 million coffee estate. So they really run the gamut. And typically for them, they're going to look at your revenue and your income. So if you're not strong on that front, a lot of times they can refer to the USDA. And the USDA has a cap of, I think it's 600,000. I shouldn't, don't quote me on that, but that's not enough to purchase land in Hawaii, right? Frequently then you need some sort of combination loan, either with farm credit, or there's a bank on the mainland that will then come in on top of a lot of that. For like, if let's say the loan is like 800,000 to acquire the land.
Okay, that makes
sense. I feel
sense.
like I've been rambling on there a little.
No, I didn't. Yeah, I wanted to make sure I let you go, because that's kind of the great spectrum of all the things available. It sounds like you just summarized it. And Kiva, just to confirm, Kiva is an online platform?
Correct. Kiva is it's called peer-to-peer lending or crowdfunding. So I tell people, if you need three things, you need three things. You need a picture, business, and then an ability to write a couple paragraphs. And those paragraphs are: 1, a bit about yourself; 2, what's a bit about your business; and then 3, what are you going to spend the money on? So then you get this campaign page, and you email it. There's kind of two phases to fundraising. You email it out to your friends and family. They utilize a concept called social underwriting. So your ability to connect with your friends and family to participate in the loan. And they have a target, depending on the size of the loan, maybe it's 6, maybe it's 22, but you got to hit a certain number of private individuals. And then after that, then you go public, into the public fundraising period. And just an incredible amount of money moves through Kiva. I think they do like 2 to 3 million a week. There's just thousands and thousands of people who are eager to lend into ag, small business owners. Primarily, it's international. The domestic lending in Kiva is just a small portion of it. But people are very eager to participate in loans in Hawaii. The Kohala Center's participated in 80 loans. Our goal is to do about 3 a month. Last year, we did over 2 a month. And these loans range from, there was a cattle rancher launching a pet food company in Waimea, got some equipment, and needed to rewire their barn for 220 to run this more commercial equipment. So $15,000, boom, paid for this one component of a larger project for just one enterprise on the ranch. All the way to a beginning farmer who was bringing in genetics. So she was bringing in a very specialized breed of pig, Mangalistas. They're this lard pig. If you were going to a fancy meat shop in San Francisco and be like, "Oh, you have Mangalista bacon" or whatever, people totally know what you're talking about. So anyways, it's $7,000 to bring in a couple of bred sows, just with the quarantine and the air travel and shipping, etc. So, that's an example. I think more like a startup loan, where it's like the enterprise is just kind of getting off the ground.
And you've been doing this for a while, clearly. So with Kiva, do you have a site, or is there a place that explains all the ins and outs and nuances of Kiva and how that works? Do you already have a web page, or is that through the Kohala Center, or is that pretty much reaching out to you directly? What's if people want to go down that road, is there a place they can go online to find more information about that?
Excellent question. Everything that you just said applies. Email me, just Google Kiva. And I should mention that the Kohala Center became the hub for Kiva, so we are responsible for the market in the islands. So the minute somebody goes into I think it's like kiva.org borrow or something, or apply or something like that. If you just Google it, you'll find it. And as soon as somebody starts an application, I am inside their system. Like I log into the Kiva database every day. I get a notification that somebody started an application, and then I'll usually reach out to them and be like, hey, do you have any questions? And once they click submit, I'll do the initial screening, make sure it has the components in there, like they've uploaded their proof of business, that they've got eligible use of funds in their description, etc. And then if that checks out, I advance it onto Kiva, which will do the review. Frequently, I have to go back to them. I mean, number one reason a Kiva loan application gets kicked back to me, or I have to reach out to a borrower, is simply the picture. You know, it seems so simple. Include a photo of yourself at your business, but people put a picture of their kid, which you can't do, or a picture of their like you can't see their face. And the thing I would stress is that if somebody's interested, to just go, either email me or go to the site, start an application, and it just really walks you through the process. It can take, if you're all ready to go, you're very tech savvy, you've got some paragraphs you can cut and paste, you have scanned in your business proof documents, you could probably be done with an application in 20 minutes.
Nice.
If you're not very tech savvy and you got to sit down and write a paragraph about yourself for the first time ever, and it's difficult for you, it can take 2 hours. So it really, I think that it depends on the applicant, but it's not hard. It's designed for, again, people who are on those lowest rungs of that ladder, where they can't just walk into the USDA or American Ag Credit and get that working capital loan that maybe somebody who had a more professional background, greater English language proficiency or education might be able to.
And it sounds like you're saying you're a resource, and or the Kohala Center for assistance if people are struggling with those paragraphs, perhaps. Is that true?
Absolutely. Okay. I have been on the phone with somebody while they're getting jammed up, and I'm like, just tell me about your life. And then I'm clickety typing away as they're like, there's no way I can write a paragraph. And I mean, a paragraph, I'm talking 3 to 5 sentences, right? This isn't a college level essay. But some people have a very difficult time with that. So correct. I consider that. I mean, that's my job.
Great. And that email that you're talking about is the one that I reached out to you with, the Kohala Center one. So that's yep. We're free to share that one. It sounds like that's the one to use. Okay.
Absolutely.
As far as proof of business, I know a lot of folks, especially at the stage you're talking about, might be in various stages of creating their business identity. Proof of business piece that you described for Kiva, is that documents of having set up an LLC, or kind of incorporation papers? Is it a GET certificate from the state of Hawaii? What kind of documents are required?
You pretty much listed them, and in fact, if you Google Kiva proof of business documents, you'll find them, and that is the list. Bank statements, tax returns, LLC incorporation documents. They take pause at the GE tax license. But usually if somebody's applied for a GE tax license, they're already engaging in commercial activity and they have some of those other items. DBA, doing a business as, like you can just register that as a sole proprietor. Anything like that that's kind of a relationship between you and a government agency, which frequently you need those items to get a business bank account anyway. So a lot of times if somebody is, even when businesses are what I would call like pre-revenue, many of them have already taken that step of either forming an entity, or maybe they had just a little bit of income, or they just got their bank account. So that the one of the restrictions on Kiva funds is it can't be used for personal purposes like purchasing a vehicle or paying off a credit card. So to that point, they are looking to verify that you have some form of business activity. that you're
So,
engaging.
yeah, sounds like it may be less stringent than setting up a bank account with Bank of Hawaii. So it's a loan, is that correct? So you borrow, it's a money you're borrowing through this web portal, and then you repay it over some set term and rate?
Correct. I would say that one of the main reasons that we are excited about it is at the Kohala Center, and we've been working on this for 8 years now. But it's fee free, so there's no interest rate, and then there's no loan closing fee. And our interest in it is that it's essentially pushing resources from the community into the food and ag sector. And to be clear, anybody can borrow from Kiva, whether you're a gutter installer or a babysitter. You can apply for Kiva loan. It's just kind of our interest and our real engagement as a lender comes from the food and ag sector. So I'm not answering your question, but I promise I will. So like in 2014, the Kohala Center launched a loan fund focused on the county of Hawaii, and then in food and ag, and that went well. So then we expanded it statewide, I think around 2016. And then in 2020, we became the hub, kind of more focused broadly. And we do work with some partners. For example, we'll get a loan application in Waianae. There's a group there called Peace. So they'll be like, hey, you really need to talk to these folks. So correct. Your question was, it is a loan, and the money does not come from Kiva. It comes from lenders on Kiva. So it's really what it does is it packages all these other lenders. For example, Eric just individually as a lender, there's a loan that attracts my attention, and I'll put in $25, and then you mentioned loan term. Typical loan terms are 1, 2, or 3 years long, so they're kind of short. So once a month, if I made a loan for $25 to somebody that borrowed $10,000, once a month I'll get a repayment. It might be like 60 cents, because Kiva really is running the data end of it, where the founder of Kiva knew the founder of PayPal, so they've negotiated kind of this fee-free relationship with PayPal. That's kind of part of their secret recipe, not secret, but special recipe. So then people will pay via PayPal, and then what Kiva does is then parses out repayments to on average, it's like 125 people or something per loan that have participated to pull this together. So it's a very long answer to what was probably a very simple question.
No, very complete answer. I think getting a good understanding of that niche is will be valuable to a lot of people. I mean, one thing we hear regularly in the interviews and the surveys that we've done for Seeds Wellbeing Project is people are struggling with that spot where they need to, for example, put in a perimeter fence, right? That's usually step one. You
Yep.
are fortunate enough to find and secure land. First step is to fence it, to keep the invasive critters away. And so that's a struggle because as I understand it anyway, I think it's at NRCS that has loans available for interior fencing potentially, but the perimeter fence, you can't get a grant or a loan for. It's not an easy thing, and it's not a simple thing, and it's not a small expense. So it sounds like Kiva might be a resource for people for that. Does that sound fair?
Absolutely. And in fact, we've done at least one, if not more, loan for just that. I think in one instance, it might have been a school teacher who, was on the side kind of developing this ranch down in Kau and, trying to get his thing together. But that's exactly right. I think at the NRCS, I get a lot of new farmers, first-time landowners who are reaching out to the Kohala Center, and they're like, where do I go from here? And the NRCS is usually like I've got kind of the short little list of places I refer people to. And NRCS has a great program for financing some of that infrastructure, specifically around your conservation plan, a soil conservation plan that they will develop with their on-staff concept. Chickens are going crazy, so hopefully that's not too distracting. But one side, somebody from the NRCS mentioned, well, if we had to do perimeter fences, then we'd there'd be no end in sight. We have to do all the perimeter fences. I'm like, well, you're probably right, because everybody needs one. With the pigs and the situation that we have here with the wild, you cannot engage in agricultural production without it.
Absolutely. And so that sounds like that's a sweet spot, I think. So NRCS, it sounds like you have an inside track on where they're effective. You want to talk a little bit about some of the successes you've seen, and do you have a sense of their process a little bit, just to, not that you're the expert, right, but just where they may fit in this whole funding stream that is so necessary for ag producers?
Absolutely. Well, circling back to that original comment, that ag is very capital intensive in a way that I think many people, they think it's so simple, I'll just get some land, make some food. But usually what I tell people is step one is reach out to farm programs at the FSA. The FSA has farm loans and farm programs. And I would think of farm programs as kind of the portal. So they'll give you a farm ID number, and you'll need that at the NRCS. So that the NRCS is the Natural Resource Conservation Service. Side note, super fun movie, Kiss the Ground, I think, where it was almost like a little documentary about the NRCS. Is a very important agency, and you will call them up. They usually book about, those chickens are just not stopping. They'll usually book about 6 months in advance, 3 to 6 months. They'll send out a soil conservationist to walk your property. You'll learn a ton about your land. They'll look for, the resources they're trying to conserve. They shift over time depending on federal policy, community demand. They'll do some surveys to find out, sometimes those resources might be like water runoff, endangered species, I don't know, cultural preservation. I mean, it's not always soil and soil carbon until, but that is, soil is really their main focus. So sometimes I think they might be called in, like if there's like, neighbor has, grubbed the land and now I'm getting all this silt on top of, so they might come in and actually address a community issue. But so they'll come up with
just to interrupt for a sec. So do you know if do they have a resource on each island? Is it one that has to fly between islands? And do they charge for those services?
Excellent questions. They have districts. So we have an office here in Waimea, and then there's another one in Hilo. I think there's either 2 or 3 districts in Hawaii Island, and every county, I'm sure, is, I'm sure they might even be like a special staff member focused on Molokai, and I know there's one on Maui, for example. So,
insert the appropriate hyperlink here.
Perfect. Well, yeah. And again, they're super easy to find on the web. And then there is no fee for their service. So they'll come out, they'll get you that conservation plan, and then they might work with you on a component of that plan. So I'll give you you asked for 2 examples. I've seen them fund stuff like stock tanks, so you keep your animals from running in a straight line. Cross fencing, you want to do like maybe mob grazing. But two successful projects I saw. One was, largest cost share program is the EQIP.
Okay, got it.
It's environmental quality. Insert appropriate hyperlink. And so they'll pay for, I can't remember much of the project, 80%, 90%. You do need to bring some maybe 75%. You do need to bring a portion of resources into the project. A lot of times that can be sweat equity, that can be your labor. I have seen farmers, they got a favor with uncle down the road. He'll just come up and run his backhoe for a little bit and, call up the cousins, we'll put in the fence posts, there's your contribution. But, so this big farmer got a $90,000 project put in pretty much at the expense of the U.S. government. Steel building, concrete pad, pens for piggeries. So that way they could do the Korean natural farming pig system without grubbing through the dirt. The county and the feds would prefer it to be on concrete, even though in my mind it makes more sense probably to have it be in the dirt. Another successful project we worked on also with Kiva was a greenhouse for one of the larger vegetable producers on the Hamakua coast, Mother Nature's Miracle. So they talk. I can mention this. It's not confidential because it's in their loan write-up, which you can find on the web. But the projects are reimbursement based. So usually that involves cash outlay by the landowner, and then they'll achieve the objectives of the project, and then the NRCS will come out, do an inspection, and then you'll get your reimbursement.
And so it sounds like step one is reaching out to them and having them come on site for an initial assessment. Do they have other requirements like you described for Kiva, business, LLC documents, things like that, I imagine? Description,
Sure. Yeah.
Description of the need, kind of budget projections.
Yep.
Okay.
And you should have them on instead of me digging deep into my memory banks, but I think they are looking to focus on agricultural producers. So they're going to be looking for that Schedule F.
Yep. Yeah, it sounds
that's really that's the tax return. It's kind of like Schedule C, but for farmers, and it says you're attesting to the federal government, I made this money in agriculture.
Yep. Okay. Schedule F sounds like it's key and with Kiva as well, as a simpler version even than for some of the documents that you were describing.
That would absolutely meet the requirements for.
Okay. So NRCS. So pay up front. So I've heard those stories of people say, I need a greenhouse, and so I had so-and-so come out and I had to pay for it, but I got reimbursed. Was that an NRCS scenario potentially?
That's exactly an NRCS scenario.
Great.
What I do tell people is, if you need a greenhouse yesterday, you just got to build the greenhouse. Like, do not wait for the federal government. So it could take, they're operating on their own timeline, right? They're understaffed and spread thin. Great it's like a Venn diagram. Here's what the public has told Congress to do, and Congress has told the agency to do. And then there's resources in it for farmers. And then here's what a landowner might need, right? And there's some overlap, but you can't wait for them. If you've got a viable business plan and you want to move forward, just build a greenhouse. Definitely reach out to farm programs, reach out to NRCS, schedule the conservationist, get that ball rolling. But I always tell people you're playing the long game there, which if you don't have the resources any other way, great. It's a huge resource. And I promise you, the larger ranches and agricultural operations are absolutely taking advantage of those programs also. If
I were to reach out today to NRCS on the Big Island of Hawaii, do you have a sense of how long it might be before that greenhouse is built and I'm reimbursed for the money that I'm out if I were to go through NRCS for that? I
would be astounded if it happened in less than 6 months, and maybe more like 18.
Okay. So let's say a year.
There's a couple things that need to fall into place. Yeah.
You say a year to be safe. Yeah.
Yeah. Then there's some things that need to fall into place there, right? Like, you need to be eligible, and you need to have a conservation plan that kind of substantiates the need for it. Somebody was going to call me, and I do get a lot of these calls where people are like, I need a greenhouse. And it's like, it's kind of my job to think through, like, how urgent is this? What resources do you have? What's the income that you have? Is there a place that you can tap existing assets? So I'll give you an example. I spoke to a farmer recently who called me for a loan inquiry on another island, an island that's seen pretty explosive growth in real estate value in the last 2 years under the pandemic conditions. And she actually needed a barn, not a greenhouse, but for packing produce. What's your address? Okay, just looking it up, pulled it up on Zillow. She's like, yeah, we just paid $800,000 a couple years ago. It's like, well, it's worth $1.4 million now. So you're not going to get a cheaper, longer interest rate, and at this point in time, than a home equity line of credit or a cash out refinance. So if you really do need, and I think in her case, she needed like about $150,000. You're going to, and if cash flow, so I'm trying to figure out, does she just, there's a loan program out where, you could probably get like a 7-year, 5-year, 7-year term at a 4% interest rate. Probably do that quickly, or if you want to pull the money out and then really stretch that out over a very long period of time. And in this instance, it was a how do I say, it was a very long-term asset, right? Like this was gonna increase the value of a property, and it was going to be something that was going to be used for decades and decades to come. So in that kind of case, since it wasn't like a consumable, again, this is an example where NRCS, not a fit at all, because it didn't really have any implications for resource conservation. But then, it was my job working with her to figure out which source of capital made the most sense for the project that ultimately, I think she went to the USDA. Just a comment, at the risk of babbling here a little bit, Jim. The USDA, we have, Buddy Nichols is taking over the FSA. He was from Maui. He was a very, I would say, aggressive about going out and supporting farmers and finding, we feel like we want to do this loan. It doesn't quite fit. How are we going to make this work into the federal regs? So very creative about trying to pull these programs into benefiting small farmers. And just talk to the USDA staff around the state, like they feel this pressure. Like I need to. If farmers need capital, we are here for them. If they can't get it elsewhere from Farm Credit or the bank or wherever, like we'll find a way to make this work. And it's a very good. I would say it's a very. I want to applaud the posture of the State Department of USD, the state. I don't know all the language or whatever. Just the USDA in Hawaii is really there to find. They come from a perspective. A lot of commercial bankers start from a place of like, how do I say no? Then I feel like they come up from a place of like, all right, how do we make this work?
Nice. And FSA stands for
Farm Service Agency, and the Farm Service Agency has farm loans, which is where this person went ultimately, and then there's farm programs, and then the farm programs are like disaster recovery. We have some weird stuff here, like for example, the remote transportation cost program. It's not life-changing, but it's for any of these remote parts of the U.S. and its territories, like Samoa, American Samoa, Puerto Rico, Alaska. There's some unique things that they've set up to, just to get a shovel here, right? Cost maybe 20% more because of shipping. So they'll pay for a portion of that, for example.
Yeah, great.
Yeah.
Just to go back to that instance where it was advisable to get a home equity loan, have you found that it's, folks like American Ag make that process simpler than traditional banks, or is it pretty much, if you can get a home equity loan, go for it anywhere? Or do you find that if there's an ag component to it, that there's more of a struggle unless you go through a banking outfit that is familiar with it?
Speaking broadly, what I always tell people to do is shop around, right? Get a couple of different quotes, bids, whatever you want to call it. Contact your primary lending institution, reach out to the American Ag Credit, because every lender has their own box. The thing about your home loan servicer or credit union or bank is that the Feds back home loans, and then it has to fit in a box. It's called conventional mortgage lending, qualifying mortgage. A couple of different terms for this. So if you're in that box, boom, you're going to get the standard kind of rate. So if you're in this case, it was like they were really, it was for them, they would have gotten a residential refinance. So they're not exactly in a neighborhood, but they had a home that you could lend on based with a conventional mortgage loan. American Ag Credit is really looking at ag land. If there's a home on it, yeah, that's fine. We can do that too. But they're really looking at the farmland. So whereas it's like a totally different mindset. So bank is going to like ignore the farm element because that's not their Fannie and Freddie. American Ag Credit, they're not really looking at a conventional mortgage residential loan. Like that's not, you can come to them for a farm that has a home on it, but they're lending on the farm and the farm income and your off farm income. Does that make sense? Yes,
that's helpful. I think it helps distinguish who I might want to turn to. And actually it shows some variety that might be helpful. to have in the mix as you're pursuing options.
Yeah.
And I guess one thing about, Kiva and NRCS, are there ceilings or floors to income? You mentioned income levels that is potentially a factor, and how much income you're able to generate or what assets you have. Are there certain floors or ceilings that one needs to either meet or would hit with those funding streams?
I think in terms of a floor, that's going to depend on how much money you need to borrow. Every lender is going to, at the end of the day, they're going to ask themselves, can we reasonably expect to get our money back? I mean, it's unethical to lend somebody money if you don't. And so if your loan payment, I'm just going to try and keep this super simple. If your loan payment is $1,000, they're going to come, there's a ratio in lending called the debt service. This is so advanced. This is like not something, there's a debt service coverage ratio. So if you want to borrow, if your loan payment's going to be $1,000 a month, they're going to want to see that you're generating $1,000 a month plus, let's call it 20%. So $1,200, $1,000, $1,200 a month in kind of excess revenue that you're going to be able to devote to that loan payment. And they don't really care if it comes from your W-2 job, your day job, salary job, W-2 job, or if it comes from farming income, but it has to come from somewhere, right? And the USDA is really good about looking at, okay, you produce crop X, and, let's say I'm trying to come up with something simple like coffee. You produce coffee. You have 10 acres. You produce this many pounds per acre. You want to take on another lease that's going to be 20 acres. You've demonstrated a capacity to generate X amount of income from X amount of acres. How's that going to play out for this expansion, right? Other lenders, Farm Credit, for example, I don't know how much they can lend on that kind of a projection, right? But my point is, there's not necessarily like a specific number that's going to be the floor. It's going to be based on how much you need, what it is that you're going to do with it, and how do I say, just your ability to be able to demonstrate that you'll be able to make those loan payments.
I mean, the good thing about having property in Hawaii, as you mentioned, it can be $1 million property pretty quickly and easily these days, especially. Yeah. So will they look at that on a balance sheet and say, well, you have $1 million sitting on your balance sheet of properties, so you don't qualify because you have too many assets, or too valuable an asset? Or are you not seeing that too much?
I've never encountered that. Yeah. I think that they would look at your balance sheet as being, I think they would evaluate that as a position of strength. And if it's going to be an asset-based loan, having equity in the property, particularly if there's going to be a mortgage against it, that would be very beneficial. I will say that a lot of the people that I talk to, they're so focused on paying their farm off. They've maybe done well in other portions of the world, in the corporate world or whatever, and then they have a retirement, they bought this land. And I meet a lot of people who are, I would say, like land rich and cash poor. They're millionaires in land, and they are struggling to pay their bills. And I don't necessarily agree that this was the best way to organize society, but we've really financialized assets.
We would like to thank Eric for sharing all this great information about small loans and grant options available to Hawaii ag producers, and also for offering to be a resource to help them. In our 2022 survey of nearly 350 ag producers in Hawaii, financial issues like debt and cash flow were near the top of their list of things that cause them stress, so we hope this information from Eric will prove helpful to many of you.
And what value is it to you to have $1 million in land and not be able to do anything with it, right? A pile of cash, farmland, it's dead until humans come into it and engage it and do things and hire people and irrigate it and seed it and till it and put it into marshal it into action, and it is enviable to be able to like own land outright, generate enough revenue from it. But is that equity's highest and best use sitting locked away in just simply the real estate?
And I think that's maybe a great way to end. I know you have to go. So I like that as a summary. breathe life into your land and use your money to have something that brings life to the land, perhaps. The intention of this podcast series is to create a safe space for respectful and inclusive dialogue with people from across a broad and diverse spectrum involved in growing and making accessible the food we share together. A diversity of voices, perspectives, and experiences can serve to deepen mutual understanding, to spark creative problem solving, and provide insight into the complexities of our agricultural system. If you, our listeners, have experiences with Hawaii agricultural ecosystems from small older farms to large, even including multinational agricultural industrial companies, or anywhere in between, and you would like to share your story, please contact us. We welcome your voices and perspectives. And thank you for listening to the Seeds of Wellbeing Experts in the Field podcast, featuring the perspectives of service providers working to support ag producers in the Hawaiian Islands, the United States, and beyond. If you have found it helpful, please follow, like, and share this episode. If you have ideas about how we can make it better, please let us know in the comments or use the link on our website. Mahalo.